So a very good morning to all our listeners. Hope you all had a great evening. Just taking a quick look around the markets and some of the things we've seen. Starting off with the major event for the overnight session was that of the RBA interest rate decision. They left rates, as very much expected, on hold at 3.5%, but it was the accompanying commentary that they said that policy was appropriate and they're still looking for the previous rate cuts to feed through to the economy, which did boost the Aussie dollar overnight and it did rally post that release at around 5:30 a.m. London time. Taking a look elsewhere, in terms of the European session, focused very much on those comments we saw late yesterday afternoon from the ECB President Mario Draghi, who was cited by a lawmaker as saying that in terms of them purchasing in the short end of the curve and around the 3-year durations would not be constitutional of state aid, and as such then that has seen some risk appetite across the board. We've seen significant tightening in the government bond yield spreads from the 2-year and also 10-year part of the curve, as we've seen a decent bid in both Spanish and Italian short-dated paper. That also has lifted some of the sentiment for the euro and equity market, but in terms of actual data, it's been a little bit less optimistic. The latest in the Swiss GDP came out much weaker than expected, an actual negative print on the quarterly reading where analysts were looking for a positive 0.2 reading. And the latest reading for construction, UK construction PMI, came in as well, below the key 50 level, so unable to match the outperformance in which we saw with the forecast busting manufacturing number from the UK yesterday. Taking a look forward then in terms of the rest of the session, one of the main things we're looking out for now is the US reading of ISM manufacturing, and we welcome back all of the US participants from their extended weekend. Volumes then will likely pick up, and with that actual ISM reading from the US, analysts anticipating a 50 reading, again seen psychologically as a key level, given any contraction reading may well have some implications for potential downside risks in the US equity market as we head into the open on the New York Stock Exchange later. That though pretty much concludes the opening wrap from me, so I wish you all a great trading day.